Hi everyone, welcome to another Weekly Forex Forecast. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the EURUSD, the Pound USD, the Australian dollar versus the US dollar, as well as the New Zealand dollar versus the Canadian dollar. And we're going to wrap things up with gold or XAUUSD. I'll show you some of the patterns I'm watching and we'll discuss what 2020 could bring for some of these currency pairs. So let's get started right now. Quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button below and also click the bell icon so you get notified every time I post these videos. Also be sure to check out the join button, which will allow you to become a member of this YouTube channel and receive 5 to 10 Forex videos from me every single week where I analyze currency pairs like the EURUSD, the Pound USD, the Dollar Yen, etc. So click the join button and you'll see all the details. First up, as always, is the EURUSD. I wrote about this one on Friday, and we were mainly looking at the fact that the pair is now retesting that 111.70 area. So notice back here, the EURUSD formed what was basically a double top where it came off of that 111.70 area and it then closed below this 110.70 region, which was the low of this double top right here. All right, so once it closed below that, it then traveled what was essentially the height of the double top. So notice how this distance right here, so this distance was essentially the same as this distance right here. Now, the 110.70 area is still significant even though it became pretty choppy right through this region. So 110.70 is what attracted buyers recently and also triggered this latest rally. Now, as of Friday's close, 111.70 is still serving as resistance in my opinion. That means that we could see some weakness early this week, and it's also going to take a daily close above that area in order to expose the next key level. However, I wouldn't want to trade that right now because we do have this descending channel top that extends from the 2019 high right above that 111.70 level. So this pattern is the one that we talked about way back here when the EURUSD was approaching that 109 support area. And it's also what triggered that October breakout back here that led to a 200 pip rally. So as of right now, it is going to take a daily close above 111.70. However, I would like to see a close above this descending channel top up around 112 before I decide to buy the euro. So if we do see a daily close above this 112 area, that could expose the 11300 region or 112.80 to 11300. So notice how this is where the EURUSD topped out back here. So 11300 would be on my radar as the next key level. But if we see a close above that 112 level, we could also even see a move all the way up here to this ascending channel top. Because notice what's happened since the pair came into this channel. So this close right back here brought us into this channel, and we then had this test on the top. The pair moved lower, started to form the bottom, came off of that bottom, retested the top, moved lower to test the bottom. So as of right now, we are still coming off of this bottom. So a close above this 112 level could expose 11300. However, it could even expose that channel top somewhere up in this region. So that's something I'm keeping an eye on. Now, understand too that we could see either a pullback here, consolidation, or we could even see the euro move all the way back here to 110.70, and a close below that level could expose 109.90. So if we do see a close below this ascending channel bottom right down here, that in my opinion would signal weakness and also re-expose this 109.90 support area. So those are the two scenarios I'm watching out for right now. However, I do think that the EURUSD is going to continue to be tough to trade as long as it is caught in this sideways range. Next up, we have the British pound versus the US dollar, or GBPUSD. And this pair made a big recovery last week after it closed below that 129.80 level. So notice how 129.80 served as this range top back here just before the pair broke out. So this breakout I talked about on the blog, and it came following this massive rally that we had. So we had this rally, consolidation, and then we had a continuation of that rally. So this 129.80 was a key level we were keeping an eye on. And notice how this candle right here closed below it. However, 2 days later, we got a close back above that level, and Friday confirmed that with a significant rally. As for where we go from here, it's really going to come down to whether or not we see a continuation of Friday's strength into that 131.70 level. Now, it is going to take a daily close above that in order to re-expose some of those 2019 highs up around 133.40. Now, of course, this high was much higher than 133.40. However, this is the key level we were talking about several weeks ago, because notice how this is a range top that's been in place now for quite some time. Furthermore, if I draw an ascending channel, you'll notice that 133.40 does line up with this ascending channel top. So this region right through here around 133.40 will be key on the way up. However, we do need to see a close above 131.70 in order to re-expose that 133.40 region. Alternatively, if we see the pound crash back down to 129.80 and close below it, that could expose this channel bottom somewhere just above that 127.70 support area. Now, I will say that anyone looking to buy the pound needs to be a little careful simply because of the aggressiveness of this recent pullback. So if I'm looking to buy a market, this type of pullback is not what I want to see. I want to see something that's more gradual, like we saw back here where the pair just turned sideways and then broke out and then moved higher. So this pullback right here was incredibly aggressive. And while the pound could continue higher, break above 131.70 and expose 133.40, this aggressive sell-off could also trigger another leg lower. So we could see a move up here into 131.70, a rotation lower, and then a move back here into channel support. So that's something I'm keeping an eye on as well. And it's going to come down to what kind of price action we get right around 131.70 this week. Next up, we have the Australian dollar versus the US dollar, or AUDUSD. And this pair recently broke out from a long-term descending channel. So this is something I've talked about now several times. And we also looked at it back here when the pair was trading within this consolidation. It then broke down and retested that channel bottom. Now notice how these candles did move below that channel bottom, but the pair never did close below it. So since that time, we've seen a breakout right through here of this descending channel. Now, this could represent at least a short-term uptrend. So as of right now, we have these higher lows, and we also now have these higher highs. So right now, I am interested in buying the Australian dollar. However, I don't want to do so right now simply because the pair has moved higher for several days, and it's also getting quite a bit overextended. So if we notice where the 10 and 20 EMAs are right back here, this represents the mean or average price on the daily time frame. So what this tells me is that we could see a rotation lower, or at least some consolidation, before we start to see another leg higher. Now, that doesn't have to happen right at Friday's close. We could see a move quite a bit higher before we see that consolidation, but I do want to see some type of consolidation or a pullback before I look to buy the Australian dollar. Now, if we do see the pair rotate lower, one level I'm keeping an eye on is 69.30. So this level right here was the top back here, and it was also resistance on this candle as well as these two candles right through here. So if we do see a pullback over the next few days or weeks into 69.30, that could present a buying opportunity. Now on the way up, I am keeping an eye on this 70.15 region. It's hard to see from the daily time frame. However, if we go to the weekly, notice how this 70.15 served as support back here. It then did so on this candle and also this one right here. So it became a little bit choppy through this area, but I do think 70.15 based on these weekly lows could be significant. Notice too how just recently we had a bullish pin bar in the weekly time frame following this breakout from the channel. So this was the breakout right here, and we then got a bullish candle right here. This is a perfectly formed bullish candle on the weekly time frame. So this pin bar is what triggered this recent rally. But again, notice how overextended we're starting to get with Friday's close being well above those 10 and 20 EMAs. So I would like to see some consolidation. These 10 and 20 EMAs start to come up, price react to that area, and then start to move higher. So right now I am interested in buying the Australian dollar, but I don't want to do so until we have some type of pullback or at least some consolidation. The New Zealand dollar versus the Canadian dollar, or NZDCAD, is similar to the Australian dollar in that we just had a breakout from a descending channel. So notice how this channel is also well defined and that it started up here. We have this test right here and also this one right before that breakout. The lower level is defined by these lows right here, this one, and also this one. So this descending channel represented a downtrend, and this breakout right here was the start of this short-term uptrend. So as of right now, just like the Australian dollar, I am interested in buying the New Zealand dollar versus the CAD. However, right now we just broke above this 87.30/40 region. So this high right here that formed a pin bar, that's where the pair topped out before. So we still have this nice uptrend that's respecting these 10 and 20 EMAs, and we also broke above that 87.30/40 level last week. So what I would like to see is a rotation into this area, or at least some sideways consolidation before we start to see that next push higher. The next key resistance level I'm watching is going to be 88.90 based on these two highs back here and also these lows. So 87.30/40 is going to be support, and 88.90 up here is going to be the next key resistance I keep an eye on. However, if we do see the pair rotate lower and then close back below this 87.30/40 region, all right, so if we see a close below that, that could also act as a sell signal and then re-expose this 8600 region. All right, so I'm looking for a rotation into 87.30/40, some type of buy signal from there to signal that we are going to push higher, perhaps into 88.90. However, if we see a close below 87.30, that would signal to me weakness and also re-expose 8600 support. Last but not least, we have gold, or XAUUSD, and this has played out perfectly for us. So I've talked about this falling wedge for several weeks, and after this rally back here, so we had this rally and we then had this consolidation that formed a falling wedge. This to me represented a continuation pattern, and I talked about this last weekend as well as several times before that. So essentially what we were waiting for was a close above this confluence of resistance right around 1480. So notice how 1480 back here served as support, and it then became resistance on these highs. Now 1480 was also the intersection of this wedge top. So this was a key area to break, and notice how this candle last week closed above it, and gold took off to the upside and just about retested that 1515 resistance area. In fact, I would say that that is a retest of that region based on several highs back through here. So where do we go from here? Well, it's all going to come down to what happens at 1515 if we do see a close, a daily close above this area. So this level right here at 1515, a daily close above this would mean that 1515 should start to serve as support, and we could then see a push higher, perhaps even up into these 2019 highs around 1550. However, keep in mind that the 10 and 20 EMAs right down here are quite a bit lower than where Friday closed. So that tells me that we could see some consolidation either right below 1515, or we could even see a pullback. Now, two levels I'm going to keep an eye on are going to be this 1500, maybe 1505 area, and also this 1490 level down here. So essentially, if we see a pullback into 1500, maybe 1505, this level right through here, and we see some type of bullish price action like a pin bar, okay, that could signal the next leg higher and a retest of 1515, and could even produce a breakout of that level. So notice how 1500/5 did serve as resistance back here. We have several closing prices as well as opening prices. It also served as resistance here and then served as support on these two candles. Now 1490 is another one. So if we see a move below this 1500 area and a pullback all the way here to 1490, this level is also significant based on several lows back here. And we also have some highs through this region as well as these two more recent highs. Now, of course, there's always the chance that we see a pullback all the way back into 1480 since we didn't really see that retest back here. But it's all going to come down to price action. So look for bullish price action at 1505, 1490, and perhaps 1480 if we do see a pullback that far. So really any type of pin bar or engulfing candle at any one of these levels could be a signal of that next leg higher. But all in all, I do think that the price action here, so just between this rally that we saw back here, this consolidation, and the recent breakout, I do think gold could stay constructive. And even though we may see a pullback into either 1490 or 1500, I do think that this is going to stay constructive and perhaps retest those 2019 highs up around 1550. So that's what I would watch for in 2020. Just keep in mind that we could see a pullback, which would be healthy considering this recent rally that we saw last week. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.